I'm just saying that, yeah, like my godfather's exact words were, they make you a goddamn robot.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Recorded September 1st, 2017. It's the Money Path Podcast. Bob Iacchino and Mike Arnold, founders of Path Trading Partners. On episode 87, the What in the Why are sponsored by MotiveWave. Go to pathtradingpartners.com and download your 14-day free trial. So let's join Bob and Mike with a casual conversation of news and the markets.
Once it hits 192.50, 192.50 is the magic number, Bob.
We've had firsts like that before. Bezos became the richest man in the world briefly.
Yeah, but now this is the first $1 trillion market cap company.
Yeah.
Potentially.
Yeah.
Does Apple earn that right?
I'm not sure what you mean.
They made it off the back of music players and video tablets that play, YouTube videos of Dora. They did not make it off the back of making brilliant computers.
Were you picking on Dora the Explorer? Do not pick on Dora the Explorer.
I did a false equivalency of $1 trillion company to Dora the Explorer. How can you not love that?
Those are big false equivalency.
Certainly it is. Certainly it is about making products that direct you to other places. But aren't all computers that? I think what Apple did better than anybody was reduce it to what we need. Well, I'm sorry, what the average person needs.
$1,000 iPhone?
What the average person thinks they need.
The average person needs a $1,000 iPhone?
The average
music player in your pocket,
Well, the average person doesn't have a $1,000 phone, right?
The new one's going to be $1,000.
I know, but the average person doesn't have it.
The average person's going to want it.
But what I'm saying is that Apple was the first to reduce things to what we needed. So think about the music player, right? People just wanted to carry their music with them. And we used to have those big Walkmans, and they were the smart ones who said, if we make a smaller version of this.
The story with the iPod is that, Apple, of course, they get a huge tax write-off if they spend a lot of money on R&D. So they put a lot of money into R&D so they can have a huge tax write-off on that money. And so they were out looking just for stuff. And John Rubinstein, she had just made this really super small hard drive. And Apple said, we want to buy them all, your entire first run of production. And invented the first iPod on that. That's how they got to where they needed to be, is they found a developing technology that had not gotten into the market yet, and they bought out the entire production run.
Called Vision.
Yeah. Yeah,
right?
Some guy who ran that company was a visionary.
I think he might have been the true disruptor.
Well, that's sort of like Snapchat.
Oh, Lord.
Hey, wait, I talked about a couple weeks ago I thought the short-term bottom was in Snap.
You did. Didn't they actually come out with a product that people would like?
Which is?
I don't know. I don't remember. It's not a product I would like.
No, the only thing I talked about was that where everybody's filming concerts and it stitches it together using artificial intelligence, which I thought was cool, but it's nothing that's going to make them millions or billions of dollars. But I thought it was
kind of
cool.
Thing that can keep them relevant for a little while.
Well, I talked about a short-term bottom. It rallied up to, the $15 mark from its low of $11.28. Now it's turned the corner. Now we're retracing a bit, and it's at a critical level at this $14 mark because it hit the declining rotation zone on the weekly basis, the 8 EMA, and it hit the 50 EMA on the daily. So it's at a critical juncture.
Very cool.
Yeah, that's my exciting technical analysis for the week.
I like it.
You like it?
like it a lot.
Well, hey, we've got Amazon rallying back a bit. Whole Foods.
Oh, we got some Whole Foods fun today, don't we?
Oh, we have lots of Whole Foods. The food and fashion nook is packed this week.
Jam-packed.
Do you know that Whole Foods, have you got into your local Whole Foods to see the big displays of the echoes and dots like in the middle of the organic food section?
Are they all talking to each other like at a pet store?
It's just great. You're going, I'm running in to get my organic avocado, which they did cut the price to $1.99 to match the other stores in the area. But now I could pick up my Amazon if I needed a new Echo or Dot or an Alexa talking device. I could grab my avocado and one of those sitting in the middle of the produce section, which I thought was
weird.
Caught me off guard. So,
your personal surveillance device. Pick it up at your grocery store.
Yeah, it's like, really? They didn't even put it like in the, they have sort of that gadgety section where you can get some like pet things or some other like
duct tape.
$50. You can get $50 like pot holders or other things. They didn't even put it in that section. They put it like right next to the tomatoes. Yeah, I had to do a sigh on that. So then we've all week stories have been coming out. Fight of the century. Who's cheaper now, Walmart versus Whole Foods?
I agree. It's going to be a boring fight, isn't it, Bob? What's the over-under on this one?
I want Bob to guess.
Guess
Bob,
what?
Who's going to win?
All right. Who's cheaper now? I'm going to give you 8 different things.
Okay.
And you're going to guess, is Walmart or Whole Foods cheaper?
Let's do it.
Almond butter.
Creamy almond butter.
Walmart.
Whole Foods wins the creamy almond butter. Okay. So 1 dozen organic large brown eggs.
Walmart.
All right, we're what? Bob's got 1.
Walmart is $3.97.
Yes, and Whole Foods is $3.99. Boneless ribeye steak.
You didn't say organic or grass-fed, so I'm going to go Walmart.
Walmart is the winner, $8.97 a pound versus $13.99 a pound.
Wow.
Yeah, farm-raised Atlantic salmon fillets.
Whole Foods.
Walmart, $8.64 a pound versus $9.99 a pound. Bottled water.
Walmart.
Yes, Walmart is cheaper by about 50 cents. Organic milk.
Whole Foods.
Correct. Whole Foods, $3.49 versus $3.88 at Walmart. Organic pasta sauce.
Walmart.
Whole Foods, they had to pay a big margin. Now now this is a Whole Foods brand, the 365 everyday value brand, but it was $2.79 versus $4.48. And finally,
wow, that's a big difference.
Yeah, that's 50% margins for sure on their house brand.
Wow.
Organic bananas.
Organic bananas. I'm going to go Walmart.
Whole Foods.
What's the difference on that one?
69 cents a pound versus 78 cents a pound.
9 cents.
Wow.
Okay,
so
add it up.
What have we learned?
Well, we've learned I don't know what I'm talking about. So there's that.
No, you're not the comparison shopper. You're not going on the Price is Right to predict food prices.
I have learned that if I'm going for organic milk, that I should just bite the bullet and get everything else at Whole Foods, because that's a huge difference.
4-3, Walmart.
And it seems to me like if it's like something organic that specializes in by Whole Foods, that you're probably going to get it there cheaper versus Walmart. But if it's anything else, it's probably Walmart. Yeah. Now, the tie-in is Gordon Haskett Research Advisors, which is a New York-based market research firm, compared 114 items before and after the announced changes at the Whole Foods stores in New Jersey, and found the average price decline of 1.2%, with 78% of the items unchanged from the previous week. I thought that was sort of interesting.
Yeah, this is phase 1 for Amazon Whole Foods, right? Looking at what they can discount. And then they're going to
I
probably
mean, the
do a
retail
phase two.
business has always been the same. They'll cut the heck out of a price of a draw-in product, and then they'll even raise other things.
Right, they'll create a loss leader and figure out where they can increase margin subtly.
Right.
Well, Target. Oh, this is great. Well, I was just looking at the Amazon chart, which has rallied up for the week. So people are viewing this, it declined to the bottom of the 3-week rotation zone. Now it's retracing a bit back to 979. Still thinking this could fall further though if we get another market sell off. But so I'm not incredibly bullish yet on it because I still think it could trade down those 50-week exponential moving average, which right now is about 885 to the 900 level. But Target, speaking of Target, they just announced this is going to make you bullish on Target, Bob.
Shoot.
Target just debuted a line of $5 wines. Did you just yawn?
Yeah, I yawned.
Well, Target just debuted. I can't say the word now. Debuted.
It's today, Bude.
You don't speak French?
No, I don't speak French. I don't. I can't pronounce anything. It's like my brain goes sideways when I try to pronounce.
That is your Achilles heel, Mike.
So Target just debuted a line of $5 wines.
It's genius.
Premium California-grown grapes.
I was going to say, do we have any background? Who makes them? I mean, California's good. That's smart.
I'm going to have to sample these, but there's a Cabernet Sauvignon, a red blend, which is smooth berry and cherry flavor with hints of spice. Offer the perfect antidote to the work week. Pair with mushroom pasta and grilled vegetables.
Oh, gosh. In aisle 3 and 9.
They should just put the aisle numbers like pairing. That would be pretty good.
You put an echo into your cart and it tells you which aisle to go to.
That's genius because a lot of people will tell you that Trader Joe's exploded on $2 Chuck.
Yes.
Yeah.
But now they have $5 Target. They're going to have a Chardonnay, a Pinot Grigio, and a Moscato, which has delicate aromas of creamy peach and melon flavors to make every day feel a little more special. Pair with freshly picked berries. What aisle?
It's very smart.
No, but that's gonna. That actually is sort of interesting that they're going after that.
No, it is. Segment. It is, and that's like a great because Walmart doesn't do that, and Whole Foods doesn't do that. Whole Foods has wine, obviously, and so does Walmart, but they don't do that. They don't have like their own brand of things that are in demand at an affordable price. What I don't know is if that's enough to get people coming into a store just to get that wine. But again, people used to line up for $2 Chuck.
I know. Now, sadly enough, you won't be able to get it in New York.
Yeah.
Because of
New Yorkers wouldn't get it. They wouldn't buy it.
Bob,
so
you have any Target charts? Sorry to walk on top of you, Mike.
Yeah, I was Target also said I thought it put in a short-term bottom a while ago. It rallied up to the 57 areas, pulled back a bit. But now, if we get a key close above 57.50, that could be pretty bullish for Target. It could be pretty bullish. We could in the longer term return to about the 63 area. So that's what I'm going to be watching for on Target. It would actually establish a trend line trade into a single candle clear path.
Nice TA. Very cool.
Yeah, that was nice TNA.
So, Bob, I have a little section here called Rock and Roll Default. I have a question. What is lower than a B? What's lower than a B?
What do you mean? What do you mean lower?
Well, A is lower than a B, right, in the scale.
Yeah. Okay.
However, the
the
financial rating of Gibson brand's Gibson guitar made default. Uncertainty it's able to refinance its debt, and its capital structure is unsustainable. It's been lowered to a CAA3 into junk territory with negative output. What does this mean?
Well, essentially, it's become a junk bond. It probably was already, but it's become a junk bond. And it's interesting that you bring that up. This obviously was not planned, but corporate debt to GDP is at an all-time high. Like it's literally at a level that it's never been before. The corporate debt to GDP ratio being at an all-time high, to me, means lots of defaults are coming. So Merrill Lynch put out a chart where the Merrill Lynch high yield index versus where GDP is, and it is literally at all-time high levels. Yeah, so in the past, when corporate debt to GDP rises above what its normal trend is, which is about a 4.9% rate, about a year later, a bunch of corporate defaults start. So it's funny because a lot of things are lining up for things to get ugly. And I don't want to be one of those guys in the midst of like what still seems to be a weaker bull market in the equities, but still a bull market, where we sit around at every podcast and go, oh, trouble's coming. But there just keeps more. I mean, would you agree, Mike? More and more little signs keep popping up. And again, if the Fed actually starts to pull back, and by the way, interesting, after today's jobs number, there is nowhere on the curve now that the CME Fed Watch tool has a Fed rate hike priced at above 50% probability. So literally no month has the probability of 50% or better of a Fed rate hike. December is still the highest, and it's in like the 30% range. But if the Fed decides to stick to their course and normalize the balance sheet and possibly even raise rates again, things are really lining up for the equity markets to kind of struggle. That's as Chicken Little as I'm willing to be.
Best Buy earnings this week.
Yes.
They beat Wall Street estimates, and they raised their full-year outlook. They earnings of 69 cents a share, and that was adjusted, of course, because anybody can't really produce real earnings anymore. But that beat 63 cents per share, and revenue $8.94 billion versus an estimate of $8.66 billion. Same-store sales climbed to 5.4%, better than the expected 2.2%, but they got destroyed in the stock price because on the call, I believe it was the CEO said this is not the new normal. So they've done their stock's been on a tear recently. So, I mean, it ran up from a low last year of 25, and now it was trading up to 63 before the earnings. It's formed a massive weekly double top pattern, and the rotation zone is out of the way.
You don't love their sector either. I mean, consumer discretionary, if things were to start tightening, I mean, obviously the labor market is still where it is. You got 156,000 today, which we'll talk about, but as a miss, but it doesn't really affect the 12-month average right now. 12-month average is still going to be around 179. I think it was 183, something like that before this morning's announcement, but Best Buy is still overpriced versus their sector. In terms of PE of Best Buy is about 14.50 right now, and the sector is about 12.25. And consumer discretionary, I think, is going to suffer if wages don't go up, and they don't look like they are. They don't love the sector at all.
Well, there you go. That's sort of the fundamentals tying in with the technicals.
Yup.
Wow. But this would, for it to trigger, let me give some levels in case people are interested. It would have to close below 52.97, which I like because there's that round number thing of 53.
Yeah.
Yeah. Then the stop reduction levels at 48.50. This could be traded just with one target, but if you wanted two targets, the first one would be 46.26. The next would be 44.03. And that essentially retraces most of the move from the lows this year. The lows this year were down around 42, so it retraces like 90% of the moves from this year if it were to trigger, go to full target.
I'm looking at the institutional ownership of Best Buy, and mostly they're lightening up. Most of the institutions are lightening up on Best Buy. Now, all of these figures would have been before this recent earnings, but Vanguard Group increased their stake by 4%, but Fidelity reduced it by 12%. State Street increased it by 1.8, but JP Morgan reduced it by almost 5. AQR Capital reduced it by 8%. Goldman Sachs reduced their stake by 7.5%. Robeco Investment Management reduced their stake by 22%. So there are some increases. Morgan Stanley is the only big one. They increased their stake by 42%, but they only have 3 million shares, so they're not one of the bigger holders of it.
Well, there you go. That was very interesting news that I did not know. I was just following the charts. I was just following the charts. All right, I want to touch on something. Oh no, let's go to crude. I want to know what's going, because we've had this massive
crude
disaster in Houston and Texas and stuff. So, and that's definitely impacted more so, I guess, the gas market than the refineries than it did anything with direct crude. But can you fill us in on all aspects of this?
Yeah. So, I mean, it's been said, anybody that pays attention to this podcast has probably been watching the news, and essentially the whole thing about this particular storm, which by the way is now a tropical storm going into Louisiana, was that it went right into the refinery corridor. So the simple fact is that the refineries will not be drawing gasoline out of storage. So we had a pretty bullish EIA report if the storm hadn't hit. We had a 5.7, I believe, or 5.4 million barrel draw, which is a pretty big draw. But there's no one to draw in the U.S. now, and the pipelines are shut as well. So going forward, you're going to have weeks, possibly months, where the draws out of storage for crude oil are going to be really bad because the refineries just aren't open. So 23% of U.S. refinery capacity was shut down because of the storm. That is a huge, huge number. Just a huge number. And the difference is the gasoline, on the other hand, went to 2-year highs, and it went to 2-year highs almost overnight. RBOB gasoline is a future that you would look at trading October contract about $1.72, but the September contract went above $2, and that's, for that fast of a move, it's unheard of. It should translate into anywhere from 50 cents to 75 cents at the pump, especially regionally, especially down in like Texas, Louisiana, Oklahoma, that area. And that again is because the refineries are not pumping. Airline stocks got hit because they're not making jet fuel. And as Mike and Mike, I don't think we said this on the podcast. I think we talked personally that airlines is essentially about the cost of jet fuel and how they've hedged it. So it is a temporary event. Right now, we're starting to get damage assessments of the refineries, and it doesn't look like there's that much permanent damage. However, it does take them days to retool and get going again, and they still have to go into turnaround. Turnaround is where they shut down the refineries to change from summer blend to winter blend. This was terrible for OPEC, and it was a terrible time for it to happen if you're long crude oil, because we're going into the end. It's the end of the summer driving season. So the last thing I'll say about it is that refineries were already running at 95% of capacity. So it's not like they can say, yeah, we're a little behind on production, but once we reopen, we'll ramp up to 95% or 100%. They were already there. And 95% in the refining world is actually pretty much 100%, because there's always certain parts of refineries that are down for maintenance or just being rotated out or shut down. And so 95% in the refinery world, that's essentially operating at full capacity. So that's why crude oil fell the way that it did, is simply because there was very little of the actual drilling that was affected by this hurricane. It was mostly the people who would be asking for the crude oil supply. I really hope I didn't lose you guys through that whole thing.
I'm here. No, okay. I just had a microphone issue.
Gotcha.
That was good because
the FDA recalls close to 500,000 pacemakers over hacking fears.
Yeah,
that's interesting.
That's not cool.
Yeah, there was a back door left in these pacemakers that come from Abbott. It was formerly St. Jude Medical, require a firmware update. Now, fortunately, it can be installed by a healthcare provider in just 3 minutes. It's not like the thing has to be taken out. But your pacemaker could theoretically be hacked. Somebody's actually done a proof of concept of this, and
you mean they upload some sort of piece of code into the EEPROM, right, or whatever is writable in there for the OS, and then it can be used? It can't be done wirelessly. It's got no antennas.
I don't know how. They've not released how exactly. Thankfully, it can be hacked, because the person who hacked it, I didn't publicly disclose. He publicly disclosed that it could be hacked, but he did not disclose the methodology.
Okay, so sidebar on that. Personal anecdote. my godfather, who had a pacemaker that was operating about 20 to 30% of his heart, recently went back in to get a pacemaker that's operating his entire heart. So his heart basically was, about to shut down, and they said, no, we can keep you alive. And so they put this thing in. And this thing was fine during the day, right? He's obviously recovering, but it's kind of outpatient-y. I mean, he was only in the hospital for a day, right? And I went to see him, and he's telling me that, yeah, they put a wire kind of in the wrong place, because when he would lay down, he just kept getting like electric shocks to his diaphragm, and he would have to sit back up. So he couldn't sleep for a day and a half. So he went back in to the doctor, and the doctor said, okay, let's check this thing out. And he pulled out, I wasn't there, but this is secondhand. And he pulled out what seemed to be kind of an iPad, and he goes, okay. And he hits a few buttons, and he's across the room, right? And he hits a few buttons, and he goes, how does this feel? And he goes, oh, I'm dizzy right now. And he's like, okay, good, that's working. Hits another couple of buttons. He goes, what's going on now? He goes, my eyes are crossing. Okay, well, that's working. He hits another couple buttons, like, what's going on right now? Well, the room is spinning upside down, and greens are now red. He's like, yeah, that's okay. Literally, this guy was controlling his entire body from a freaking iPad across the room. So there's the hacking, I think, is if you hack into that system. He goes, pretty soon I thought they were going to hit a button. I was going to be waving my arms, clapping my hands, marching back and forth. He said it reminded him of Mussolini when they made him do things he didn't want to do.
Oh, really? You tied this into Mussolini?
Never forget history, kids.
You're going to make him a fascist robot, according to him. I don't mean to laugh because he's a wonderful man and it's tragic, but the way he was so angry that they were controlling his body with the iPad had a comical element to it.
Have you heard the latest on Wells Fargo?
Yeah, I heard another, 1.5 million accounts?
1.4 million more fake accounts than originally discovered. They're going to refund more customers for charges they should not have incurred after expanding its review of improper sales practices. Wells will return
Come on.
They will return $2.8 million to 1.4 million additional customers who appear to have consumer and small business accounts opened without permission. And it will return close to $1 million to about 528,000 people who may have been enrolled in online bill pay services without permission. So,
I mean, come on.
You were saying this 6 months ago, Mike. You were saying that this is just the start.
There's never just one cockroach.
There you go.
It's systematic for, what they were doing.
I mean, come on.
So is that your full take?
They just found that's my comment. Come on. We looked again and we found 1.5 million more.
Come on. 4 to be technical, but yeah, that's not like we found 10 more. You found another. Oh, this is not
the original amount they found. It's like they found another 10 or 15%. I mean, come on.
I just like you keep saying, come on. It's like, come on, man.
It's just come out and tell the truth. It's like, okay, just so you know, we found these we thought we could get away with, but then we decided we couldn't. So we decided to tell you again. Ugh.
Yeah, it's not very good for Wells Fargo. They've got to gut that place.
Ugh.
I mean, really, it's now closing below a critical level too, which is going into a really nice short. Right now, it's trading 51.26. I'd like to see it close below 51, and then if we see that, I think we'll revisit the $45 mark. Is what I'm watching for.
Anywhere near that stock, because if they could just all of a sudden come up with another 1.5 million. I mean, again, what'd you say at the time, Mike? There's only never one cockroach.
Yeah. That's the old restaurant adage, because you find one, it wasn't like, oh, that's the only one. You better. They're always behind the walls and they're hidden everywhere. So if you found one, you probably need to fumigate the whole place.
Yeah.
When your banking institution uses a covered wagon drawn by 6 horses, you should do a second look.
Is that your takeaway?
Oh yeah, I've always seen their logo and I'm like, I'd rather.
Everyone knows you always need at least 8 horses.
Yeah, you gotta have 8 horses or maybe like an armored vehicle.
Well, when they were first founded, they didn't have armored vehicles.
They didn't have fake accounts either.
They found this old leather-bound ledger in the back with 1.4 million accounts that they're writing with a quill pen.
Hey, nobody looked at Mr. Franklin's ledger. He retired 6 years ago.
Sir, this was 106.
Unbelievable.
Yeah, so that's the latest on Wells. And that was the going to zero and fraud corner update. Oh, I hate that segment. Man, this
There's a guy behind me Snapchatting. Should I ask him if he likes the stock?
Yeah, ask him. Ask him if he owns the stock. How do you know he's Snapchatting?
Because I smell his food and I'm hungry. And I looked over and I smelled the food he's eating. And so I turned to look what he was eating. And he's literally putting like a cat's ears on his face. And I think that's Snapchat. I don't know. Believe me, it's easy to tell when someone is Snapchatting. You like the stock, Mike? You like Snap? I don't like Snap's pattern right now.
You want me to really comment on Snap again?
Yeah, I don't like how it failed to 50. You like that?
No, I'm not bullish on it anymore.
Good.
It's put in a short-term low.
50, yeah.
And I said a short to medium-term low, which was put in. Now it rallied to the bottom of the weekly rotation zone and to the 50-day exponential. And on the rotation zone was on the weekly. So this is major resistance area at it.
How do you like that we're rallying up like 0.75% on the transport index, a little over 0.25% on the Dow, a little over 0.25% on the S&P, all because the jobs number was crap.
No, but you know the jobs numbers.
I do know the jobs numbers.
Why don't you start there and go through all the jobs stuff?
So literally the jobs number didn't matter this month, and that's one of the first times I've ever seen that. But we had 180,000 estimate. It came out about 156. Unemployment of 4.4. No real change in the U6, which is the underemployed. That's kind of the real unemployment number, the real number of how many people are unemployed. So there's no change on that. But the thing that struck me is that the work week fell, and we got to look at the productivity numbers that are come out now. Did the work week fall because people are more productive, or did the work week fall because there's less work? And the wages were expected to uptick year over year, and they didn't. They stayed flat. So they didn't fall from last month, but they didn't uptick either. And that was the only thing that mattered. And the net effect of that is that I don't know how the Fed justifies raising rates or even reducing the balance sheet, but I guess they can still justify reducing the balance sheet. Talked about this a little bit last week, but Robert Kaplan had a really good reason for why they could still reduce the balance sheet. But I'm telling you, I mean, if numbers keep coming out like this, the headline number hasn't mattered in a long time on the jobs, because it's pretty steady. I mean, it's either a miss or it's right around that 170,000, which some analysts say is enough to keep the job market growing and keep labor markets tight. But it still seems to me that there's just no sign of any price inflation. And then we're talking about Amazon and Walmart fighting, right? So how are they going to fight? They're going to lower prices. I see that big happy rollback guy on the TV commercials, with Walmart and Amazon's fighting on price. And how is there any inflation when there's just no wage inflation?
Well, there you go. I mean, I don't think we're in a deflationary environment for most things besides like college tuition or healthcare.
Yeah, and it's structural, right? And that's why is nobody mad that the healthcare companies are the most like healthcare, and save for the insurance companies now, but healthcare is like one of the most profitable industries. And then people are like, healthcare costs keep going up. Well, so do their profits. So there's a disconnect in there somewhere. We got to open up competition on healthcare the same way that Amazon and Walmart are competing, because healthcare is so profitable right now. And by the way, side note on insurance, if you look at the KEI, I think it is, it's either KEI or the KIE, I can't really look it up right now, is an insurance ETF. And if you look at that thing just doesn't dip until there's a natural disaster, and then it dips, and then it always rallies back. I mean, it is just steady up, and it's the KIE. And the reason being that insurance companies, after they pay this out, they've got $700 billion in reserves. in the insurance world. And right now they're saying that Katrina and Andrew combined is what Harvey's going to cost. So you're talking about close to $200 billion. That doesn't even touch the reserves. They've got over $700 billion in reserves. And the minute they pay all this money out, they then raise rates, which is fair. I mean, that's their business. I'm not making a moral statement. I'm just saying that when the KIE bottoms, you buy it because it just doesn't pull back. It just doesn't ever stay down.
I had not looked into the KIE.
Yeah, the last time it pulled back substantially and kind of hovered there, took like 11 months to turn around, was at the start of the crisis. And that's because AIG was going bankrupt until the government bailed it out. So the only thing that could keep the insurance ETF down is the bankruptcy of a large insurance company, but the government doesn't allow that. So what's the difference? It's like literally the KIE or something along those lines should literally be a part of everyone's retirement portfolio because they just don't go down. And when they do, you should buy it.
Very good advice.
Best business ever.
So I'm just going to touch on some other numbers for the economy segment. We had wholesale inventories beating 0.4 versus expectations of 0.3. Personal income beating at 0.4 versus expectations of 0.3, but personal spending missing 0.3 versus expectations of 0.4. Manufacturing just came out. This ISM manufacturing beat 58.8 versus expectations of 56.5. The BEA did its first revision of Q2 GDP, which they revised it from 2.6 to 3.0, beating expectations of 2.7 print.
There's our 3 print. Finally got one.
There's the 3 print. Well, that's the first revision. We'll see.
Yeah, we'll see more, obviously.
The Atlanta Fed Q3 GDP nowcast is at 3.3% down from 3.4. Did you see this about the Phillips curve?
Yeah.
The Fed study about the Phillips curve this week?
I heard about it. I haven't read it.
Yeah, it was pretty interesting. Could you just remind people really quick what the Phillips curve is?
Essentially means that as wages rise, prices rise. Simple.
Yeah, they found that that's not true.
Okay, good.
So, let me find some.
I'm starting to hear people say things like the now disproven myth of the Phillips curve. I've heard that phrase now.
Yeah, a quote, our results indicate that monetary policymakers should be very cautious in their reliance on the Phillips curve when gauging inflationary pressures. Mm-hmm. This was done by the Philadelphia Fed economists, and that's their conclusion. So
it's pretty bad if this thing has been disproved, because I just threw it into the computer just because I said wages rise, prices rise, and what it says in the computer is the inverse relationship between the level of unemployment and the rate of inflation, which is the same thing. So in other words, if unemployment drops, that means people have to pay more money to hire somebody away from somebody else, and then inflation rises. That's extrapolating the Phillips curve out. But if this thing has supposedly been proven wrong, the Phillips curve, essentially everything, monetary policy, everything has been based on the Phillips curve for 30 years now. So I just think it's really funny that you can disprove this thing when wages haven't risen in 10 years.
Yeah, so they've come to the conclusion that it's pretty useless.
Perfect.
So how's that going to tie in with them raising rates?
Yeah, I don't know. I mean,
oh, come on. This is all just fun at this point.
It is really just getting fun.
May you live in interesting times. Isn't that? May you live in interesting Fed times. That's the new quote. Do you have any more time, Bob, or are you done?
Let me do my why, if we could.
You do your why.
Today's edition of The What and the Why is brought to you by Motive Wave Software. Motive Wave Software is a well-established developer of easy-to-use, full-featured charting, analysis, and trading software built for the individual trader. Motive Wave offers the best charting tools used by the pros, such as Elliott Wave, Fibonacci, Gartley, Gannon ratio analysis, but it's presented in a very easy-to-use way. Motive Wave has a product to fit any budget and any trading style, and one of the very best features, it's available on Windows and Mac. So go to pathtradingpartners.com right now to get your 14-day free trial, and then visit them at motivewave.com.
So my why for the week has to do with how everything has completely flipped on its head, and Harvey will be blamed. Hurricane Harvey will be blamed. And rightly so to a certain degree. I've seen estimates from shaving 0.2% of GDP to 1 full percent. I've seen analysts say that essentially that just pushes back growth we would have had already. And I've seen analysts say, no, there's a certain amount of growth that is just destroyed. And the example this particular person gave, which I thought was kind of cold, was that, look, if somebody doesn't eat for 5 days, they don't eat 5 more days of food once they get food. Right? There's a certain amount of GDP that is just lost, right, due to a storm like Harvey. And when you combine Harvey with the idea that wages just aren't going up, and you get subjects like Mike talked about, where Walmart and Amazon are trying to be the last two standing, and what does Target do in response to that? Lowers wine prices, essentially. We're in a structural deflationary environment now, not a lack of demand deflationary environment. It's structural. And everyone essentially is competing on price, and products are becoming more and more homogeneous. But right now, what economists and specifically the Fed have as an excuse is Hurricane Harvey. Now, remember, Hurricane Harvey literally decimated the 4th largest city in the U.S., soon to be the 3rd largest city. Houston will overtake Chicago. It'll be slower now since they have this rebuilding to do, but Houston was on pace to overtake Chicago. Illinois is losing 60, 70,000 people a month because of the terrible state of financial affairs here. But it's 4th largest city in the country, 1.5 million people without power. The rebuild will be credited for construction spending rising and base metals prices rising, but also for things like GDP missing, crude oil prices falling, things like that. So what you're going to see is very similar to what we saw a few years back, Mike, where everything was blamed on the harsh winter and the weather. We're going to see that now. Effects of Harvey, effects of Harvey, effects of Harvey. Everybody will be saying this. Everybody from Target all the way down to economists at the Fed will be blaming Harvey. So keep an eye on that. Your data isn't going to mean what it meant prior to this particular storm. And we have Irma coming, by the way. Irma is coming through the Caribbean. It could potentially hit the East Coast. So all data, and it started with today's non-farm payrolls. Non-farm payrolls there was no Harvey relationship here. And the previous week's crude inventory had no Harvey effect. But next week's crude inventory will. Next week's crude inventory will include the beginnings of Harvey. And this particular week's rig counts won't either, but next week's will. So you're literally going to get Harvey drawn all over all of the data, and you cannot rely on data to look at trades or anything like that anymore. Just brings us right back to why Mike and I always rely on price action. By the way, quick aside, another example of relying on price action. North Korea shoots a missile over Japan, right? And I get a call from a sort of client/friend who says, I sold everything. North Korea just fired a missile. We have to respond. And literally 6 hours later, the Dow's up 30 points. So everything is turned on its head, in part because of Harvey. That North Korea thing was a sidebar. So data will not matter for probably 6 months. That's my why.
Can you answer a question for me?
Shoot.
Why, if North Korea fires a missile over Japan, everybody goes in and buys the yen like as a flight to safety?
Yeah, that shouldn't be the flight. That's just reflex action. A lot of that is taking off the carry trade when that happens, right? Because they're just covering their yen exposure on the carry trade. But no, it has become, the Swiss and the yen have become the flight to quality when the U.S. is involved. Otherwise, it's the Swiss and the U.S. I think it should just be the Swiss, gold, and Bitcoin.
I don't think you should rush when the missiles going over Japan go into rush to buy yen.
Totally agree, dude. Totally. Unless you short the yen.
Because that was classic.
If there's an attack on Japan, what is this? Do you think the Bank of Japan's going to tighten?
No.
So if you're short the yen, you got to buy it. But if you're not involved at all, I agree. You don't get involved.
Right. It's not like, oh, safe haven, Japan. No.
Could it
Right.
be a global financial just call of support for Japan to say, hey, we're throwing in with you. This is a risk just for support. Nope.
Yeah,
Okay.
no market guys don't do that. They don't care.
Right. Capitalism. Right.
They're like, cool. I'm short again. I'm leaving them on.
No feels in capitalism.
Exactly. We don't care. There was an analyst this morning who goes, that one of the guys said, that's a lot of pressure on GDP. And he goes, I don't care how GDP feels. He had a dead serious face. He was on Bloomberg.
Well, that's great. Oh, I have another question related to the hurricane.
Yeah.
Because do you think it's going to help? You know, we've had this glut in the auto industry with all these cars and the huge inventories. And now I guess I was reading today, and this is actually tied into trading. Yeah, a million vehicles have essentially been totaled.
Yeah, lost.
Oh yeah, they're I mean, essentially when they're flooded too, you can't do anything with them. It's done because it costs more to rehab them than it does to just scrap them. So that's got to help some of these automakers with their excess. It's gonna not immediately,
Tesla?
but no, not Tesla, please, no. But it's got to help some of these automakers with their excess inventory because auto sales. And there was a glut of used cars coming off lease and on the market, and I think this is going to somewhat help that.
All you got to do is look at a chart of Ford. And I totally agree.
Pretty nicely.
Ford has been screaming since the hurricane hit. And I totally agree with that. By the way, I heard a guy, interestingly enough, another anecdotal thing. I heard a guy, I was eavesdropping on a conversation where the guy said, we got to get ready to go buy a bunch of these cars because they essentially are just waterlogged and they still work okay. It seemed to be something that he had done in the past, where he has some sort of thing where they definitely get sold to those car lots on Western Avenue, if you know what I mean.
Yeah, that's not the point because they'll go to salvage title.
Yeah.
And these are the guys.
Yeah, they're not going to CarMax.
No, these are the guys who refurb them, and oh yeah, it's fine. As they open the door and there's a fish flopping out of it. Yep.
Anyway, I got to go, guys. Thanks for tolerating my schedule and including me in the show this week.
All right. Well, we will talk to you next week.
Yep. See you guys. Thanks for listening.
Bye. Well, did you see? Yeah, you saw that news too about this week with Ford teaming up with Domino's on self-driving pizza delivery tests. So they're testing your pizza being delivered by self-driving vehicles, and they're working on it in Ann Arbor, Michigan. They're going to randomly select customers, so you can't specifically request that your pizza is delivered by autonomous vehicle, but you might be randomly selected to get your pizza delivered. Now, it's still going to be there's still going to be a driver assisting it at this point, but what's interesting is they're not worried about, oh, yeah, we'll get there with being able to deliver these pizzas via autonomous vehicle. That's not the big worry. It's like, how do we get the pizza the last 50 feet to the person?
Yeah, well, you know what? All the technology is there, and it's getting to the point where any company can build an autonomous car. The problem is a reason to put them on a road that can be kind of safe, and delivering pizzas means everybody's got to eat. There can be lots of reasons. There's different mission parameters to get to that location. Seems like a great reason just to get hours on the road with an autonomous vehicle. Fantastic idea. So the whole idea about getting up the doors and stuff makes the story more cute, but I see it as, okay, great. Ford is one company that can devote a vehicle, and Domino's is one company that can devote a reason to use it. Seems like a brilliant way to go. And Detroit has the road system to do this, because Detroit, every time I've been there, it is a car town. It is designed for cars. You have all these U-turns that are designed in all these brilliant locations. I mean, Detroit is a wonderful city to drive in. And what a better way to test autonomous vehicles, in my humble opinion, is pizza delivery in Detroit on a Ford. Fantastic.
Yeah, this self-driving stuff, we've only been touching on this really. I mean, we've talked about it here and there for the last 6 months, but it's really been a focus because it's ramping up so quickly. It's not far off now. Mercedes came out. Their smart car Vision EQ for 2 concept vehicle will be presented at the 2017 Frankfurt International Motor Show next month. And this is all right, don't make the joke on a smart car because
It's such a cheap joke.
but this is a level 5.
Oh, that's all
We've
the way.
talked about the levels. This is fully autonomous with no steering wheel or pedals.
So that would be quarantine. Level 5 will be quarantine in their areas to roam free. So where are they going to test that?
I don't know yet, but they've actually produced. They're debuting it, so they're already at level 5 autonomous with this car. Now it's going to be designed for ride sharing, so you can hail the car via an app, and then it will put on entertainment and everything else for you. But there's no steering wheel, and that's how far they are. And there's
it's 10 years, Mike. I mean, it's 2027. Is if you look at what happened with the horse and buggy, New York was full of horses and poop was on every corner. 10 years later, almost no horses. It really only sort of took 10 years. And Detroit's a perfect city for Ford because that's not a very populated city these days. So they can do a level 3.
You're back to Ford.
Well, they can do a level 3, right, or level 4, right?
Well, Ford, I mean, they're definitely they've got some of the level 3 stuff down. Everybody within 2 years, everybody's got level 3 into major production. The major focus now is 4 and 5. That's what's really, but it's 4 and 5 is coming a lot faster than we think. I had another.
I just want to know where their quarantine zone is. I mean, you have the Cummins truck.
Well, hold on. Let me go to Magna real quick. Magna's new Max 4 self-driving platforms offers autonomy up to level 4. Now, Magna is a tier 1 automotive industry supplier, and it's introduced this new functional autonomous driving platform concept is showing off to its automaker customers. This can get all the way, as I said, to level 4, which is highly automated self-driving, which does not require human driver intervention. This Max 4 platform can be tied into existing vehicles, and you just have to put on the camera, the radar, the ultrasonic and LiDAR sensors, along with the onboard computing capabilities, and it can essentially turn any car into a level 4 car. And these sensors aren't big, so they can be embedded into areas all over these cars, and you can't really see much different versus a stock car. They're sort of saying, okay, we've got this. Whoever wants to buy it at that point. So they're shopping it to, just car makers like, hey, we can already provide this for you.
Yeah, it comes down to the wiring harness at that point. Because right now, the traditional wiring harness for an automobile is 1950s technology. Sure, the computer horsepower with OBD2 in there is modern, but we're still using copper wound wire and junction points, where the Tesla uses pretty much an IP network. It uses a data network. And if they can get the Bolt also uses a data network too, if they can get rid of the wiring harness as fast as they can, then being able to use a third-party OEM to tap into the vehicle just with a Cat 5 cable. It's coming.
So it's coming fast. Well, the Magna used a level 3 self-driving test vehicles to conduct the first North American border crossing during a drive that covered 300 miles. The vehicle drove itself 92% of the time, and that's on level 3. So they've already got that level down pretty good. And then, this was an interesting infographic. Who leads the autonomous driving patent race?
IBM.
No. Bosch.
Okay, yes, for sure.
Bosch has 958 patents related to autonomous driving. Then Audi, 516. Then Continental, 439. Then Ford, 402. Then GM at 380. BMW, Toyota, Volkswagen, Daimler, and Google at the bottom of the list on this chart at 338.
Good. I don't want Google to win this.
I didn't see. Well, I didn't even see Tesla on the list either. So, just like their batteries. No comment.
Exactly.
Speaking of Tesla, Cummins beats Tesla to the punch. They unveiled their heavy-duty electric truck. This is a Class 7 heavy-duty truck cab Tuesday that's it's dubbed AEOS, AEOS. It's an 18,000-pound tractor cab. It's capable of hauling 22-ton trailer with a 100-mile range, and they're going to look to expand that range in the future as soon as batteries catch up. But it can be recharged in an hour with a 140-kilowatt charging station, and their goal is to get that down to 20 minutes by 2020.
This is a proof of concept. This is not ready to go on the road. They're like, okay, we have our proof of concept. Now we need, to really work it. So, yeah, I was hoping it'd be ready to go, but it's not ready to go. I mean, it's
ready to go in 2019. But that's where people were all hyping about Tesla. No, they're going to be the first one rolling it out. Well,
no, a real company that's focused on the truck is going to win that first one. It's going to be Mercedes. They're already running trucks back and forth with no drivers in them for tests on roads in Germany. They're doing all sorts of stuff. The thing that I've read as I've looked into this autonomy, it's really easy to confuse a computer. It's really easy for a human to do some sort of action that can be determined by LiDAR or radar or cameras that can just confuse the computer so easily. Like anyone can do it. You throw a frisbee, a basketball, any non-ballistic motion. It's these analytical machines are not designed to learn and understand at this point. They're just looking for patterns. And if you throw a pattern at them they haven't seen, these things can turn into a missile. I think that's going to happen. And, that's why the quarantining of vehicles for certain autonomous levels will happen. I just see that as being the case. We have not seen the backlash from the machines on this yet.
Backlash from the machines.
This is a good one to stop. Did that
There's
happen?
been there's been a lot of reports recently of all of a sudden we've had some freakouts of Teslas recently, but don't know what that's tied to. Now, you're speaking of quarantine zones and everything else, but autonomous car legislation is heading to the U.S. House for a vote next week.
Good.
So this bill would allow up to 25,000 self-driving cars that don't meet current autonomous safety standards, i.e. requiring controls and seated humans to take the wheel if need be, to hit the streets in the bill's first year. This number could increase to 100,000 vehicles annually for the next 3 years. Under the bill, companies and automakers would need to secure permits to deploy their own autonomous vehicles and submit safety assessment reports to regulators.
Yeah, like like any custom car, you put a big hot rod motor in some crazy old car, you still have to have it looked at, I totally agree.
So, but one we have not talked about is the Burger King Russia introduces the Whopper coin, the fast food industry's first digital currency in Russia only. The company has reportedly issued 1 billion of the tokens. The Whopper coin launched in tandem with a new loyalty program. For each Whopper burger customer purchase, they'll receive 1 Whopper coin in a special cryptocurrency wallet. While the coin's wider use is unclear, some reports suggest that the Whopper coin will be accepted as payment at Burger Kings across Russia.
So is the government going to provide burger sanctions?
So
this is ridiculous. Where do they advertise this sort of thing? So they can get. This is a promotion. This is marketing. That's
real. How much cryptos are getting into everything now, though. You have they're becoming promotional tools for fast food restaurants.
Oh, in Russia, even. Ugh.
Is Bitcoin really anonymous? The IRS moves to track cryptocurrencies with new chain analysis tools. They can now track Bitcoin and other cryptocurrency addresses. They're doing this for tax reasons, to people who aren't recording trading Bitcoin profits. And we do talk about trading Bitcoin. So if you are trading it and making money, you should still be, it's like any other thing you're trading, you should be reporting the profits. And they are working with Chain Analysis, which is a company providing these Bitcoin address tracking tools that can sort of recreate the whole chain of events and try to tie it into who is actually behind the transactions. So they can then say, hey, well, you were doing all these transactions and it was obviously making money and you didn't report it. So
yeah, this is on you out there. If you make money doing anything, mowing lawns, a lemonade stand, you You need to be responsible with your earned income or your other income that you've got. Got to report it.
Yep. So that's not as anonymous, at least with Bitcoin. It's not turning out to be as anonymous as people thought. So that's just a heads up to people.
Don't break the law.
Yep. Now there's 6 banks join UBS's where is that? I just went cross-eyed. The utility coin blockchain project. Barclays, Credit Suisse, Canadian Imperial Bank of Commerce, HSBC, MUFG, and State Street have teamed up to work on the utility settlement coin. This utility settlement coin, based on a product developed by Clearmetrics Technologies, aims to let financial groups pay each other or to buy securities such as bonds and equities without waiting for traditional money transfers to be completed. Instead, they would use digital coins that are directly convertible into cash at central banks, cutting the time, cost, and capital required in post-trade settlement and clearing. The coins, each convertible into different currencies, would be stored using blockchain or distributed ledger technologies and allowing them to be swapped quickly for the financial securities being traded. Fascinating. So we've alluded to this a few weeks ago, and now you have this utility coin blockchain project, which bypasses all this money transfer, so you can go straight in from a security or a bond, a security being a stock or something else tradable on an exchange, to the coin, to the utility coin, and then back into something else without having to do, like, you don't have to convert dollars to Swiss francs and then rebuy stuff in Swiss francs. The utility coin essentially does it all using the blockchain technology.
You know, there was
everywhere.
There was an ad running on one of our crypto videos that was convert your gold to Bitcoin, and it was a slick produced ad. It's just so mainstream now. I'm waiting for a sitcom.
A Bitcoin sitcom?
Yeah, I guess that's what we're doing here. It's a crypto radio play.
A sitcom. Well, that's my major cryptocurrency news for the week. It's just like autonomous vehicles are moving very fast, cryptocurrencies and blockchains taking over everything.
Absolutely, and this show is moving very fast. Now,
Yes.
do you want us to do an out with anything? You want to just boil this in ammonia? We had Bob's out piece. You want to do a why piece? You want to hit anything in the news?
I've talked about this. No, I think let me just scan through some stuff real quick to see if anything's popped up while we've been on the show.
Let me do a stop and go here. You're this out piece. You want to do a why piece? You want to hit anything in the news?
I've talked about this. No, I think let me just scan through some stuff real quick to see if anything's popped up while we've been on the show.
Let me do a stop and go here. You're good.
I'm just saying that, yeah, my godfather's exact words were, they make you a goddamn robot.